Hi everyone, and welcome to Thursday, where of course we do share and review. Today we're going to take a look at Rocket Lab. This is a share that someone has asked me to take a look at, which is really good. Now, before we go into that, just a couple of things I wanted to let you know. The first is I've still got the offer of my monthly money map available, and that is where you can simply download an interactive spreadsheet. It will identify potentially any spending leaks you may have and hopefully get you onto a better path of financial freedom. Recently gave it to another client, and gosh, they found over $2,000 worth of subscriptions they were completely unaware of that they were paying. They knew that a couple of them were going out, but they were unaware as to how much was actually going out. So that's where my monthly money map can certainly help you with that. So for these people, they've given themselves over a $2,000 a year pay rise after tax, which is absolutely fantastic. So the link for that, of course, is below. The other thing as well is remember that if you've got a share that you would like me to review, doesn't necessarily have to be on the New Zealand market at all. By all means, pop it in the comments. I'm more than happy to do that for you and hopefully help you on your share trading journey. Right, we'll take a look at Rocket Lab. Like normal though, this is for educational purposes only, definitely not intended to be personalised financial advice. For that, you do need to go and have a chat to your own financial advisor. Right, I've got Rocket Lab up here on the screen, and the reason I was asked to do this particular share is because it is in effect a New Zealand company, but it's listed, as you can see, on the NASDAQ. So it's listed in the US, and it has had an absolutely phenomenal run. But the backstory around this is this person, because of the connection to New Zealand, had made an emotive decision to actually buy into this share, thinking it's a good share, it'll go up, all of these nice positive things. Not sure exactly when they bought it, but you can see here that we've had a huge spike, and it reached a closing price of $96.30, and that was around the beginning of December. Since then, we've had a lot of down weeks. In fact, we've had 4 in a row. We then had a positive week, but last week it closed down again. And you can see that there by that dashed line. It closed at $70.86. Whenever I'm looking at a share, I never have any of those emotions in place. I always like to do the comparisons and basically run the moving averages over the share and see what it's doing. So let's do that. So first of all, we will use the 30, in this case, week exponential moving average. Right, so the share meets that particular criteria, if you like. It is still trading above that 30 week. Let's combine that with the 15 week moving average. And again, we use exponential. Nothing special about these figures. They are just what I use, and I use them constantly because it gives me more of a constant result. Right, when we zoom in here, you can see by that blue line, that's the 15 period moving average. The share has closed just on that. For me, that would be quite cautionary. If I look down the bottom, there wasn't a lot of volume for last week, but you do have to bear in mind that the share is trading there. So to me, based on this information, you could pop it on a watch list, but just keep in mind, obviously those last 4 weeks prior, look at the volume. There was a lot of volume with that particular sell-off. Why? I don't know. I don't tend to look into the whys and wherefores. I'm just looking purely at what the charts are telling me. Let's now jump over to the 1 year and see how that compares. Now, the 1 year chart brings up these candles as daily candles. And you can see that the blue line, being the 15-day moving average, crossed through that 30 moving average. And that was around the 11th of February this year. And if we zoom in a bit more, you can see that the share is now closed on Friday last week below both of those moving averages. And so that to me is immediately a cautionary sign, purely for the fact when the share is trading below both of those moving averages, that means that there could be further downside to go. I never ever want to buy a share when it's below those moving averages. Sometimes I might be holding a share that's below those moving averages simply because it hasn't hit my stop loss, but I will never buy a share that is below those moving averages because that's where negative things can really start to happen. And shares can go to zero. I certainly had that happen early on in my career a number of years ago. Again, a reason why I use stop losses, and also a reason why I never want to buy a share that's trading under those moving averages. What I want to see is both on the daily chart and the weekly chart that these moving averages have crossed to the upside and the share is trading above it. Because when you've got the 15-period moving average trading higher than the 30-period moving average, usually means that your share is in an uptrend and potentially there's a lot more upswing to go. And a good example in this particular one, if I go back here, basically around the 11th of December, you can see that those moving averages crossed on the upside, and that particular day it closed, if you like, at $63.53. Then we reached a high point here, which was the 16th of January. Yes, it closed at $96.30, but then it's started to turn. Now, if we were using these moving averages as our exit and entry points, because that's what some people do, in this particular share, let's say you bought it at the close of $63.53 and you sold it the moment that those moving averages crossed. And again, the close at that time was $69.62. So you would have made yourself around $6 odd per share. That is another way that people do use stop losses. I tend to have a predetermined figure as to what I'm going to use for mine. But what I'm really getting at is that when these moving averages cross to the upside, there's potentially a lot more further a share can run. And that's why I like to look for shares that are already in a positive upswing. Another really good indicator here, if you look between sort of December the 19th and then the following day, which was obviously over a weekend, the 22nd, you can see a really big gap has formed. That is actually a very positive indicator for shares. And you can actually see that in this example, it has continued to run again. Yes, we had the gap form between the 15th of January and the 16th of January. The difference is, though, is looking at that 16th of January's candle, it's got a very big wick on it. In other words, that's the top of the candle. And that actually indicates that the sellers were in control that particular day. So that is something to also keep in mind. Now, let's just jump back to the 5-year chart. What I'm going to do is I'm going to take these moving averages off. And I'm also going to make a comparison here with the NASDAQ and just see how it's going against that. You can see here that over the last 5 years, the NASDAQ has had just under 65% return on average just over the last 5 years, whereas Rocket Lab is way above that, and that's had, 556% return, even where it's trading at the moment. So because it's trading above the NASDAQ, that is a good sign. I definitely want to see that a share is trading above its indices that it's on for at least 5 weeks minimum. So that would not be a knockout at the moment. So for me with Rocket Lab, that's the only thing that I would be looking at is those moving averages, waiting for them to cross again to the upside. Until then, definitely stay out of the market. But that was why I wanted to show you this, because there's always a lot of emotion when it comes to buying shares. And when shares go down, that's pretty much what people say is they start looking for reasons to hold on. And it was always things like it's a good share, it'll recover, all of these sorts of things. Now, quite often they will, but not always they will. So it's really important to give yourself a set of rules and stick to them. It doesn't matter what people tell you over a jug of beer or at the barbecue. Make your own rules, make your own decision. That's what I'm trying to do as well. And I really hope that's helping. So like I say, if you do have any questions at all regarding the share market, sing out. I'm happy to help, happy to do a video on this, or even if you'd like more education, perhaps we could do some training courses and things as well. But let me know. You're welcome to either reply in the comments or direct message me or even email me, and we can help you out from there. So hey, until next week, take care.